Hello traders out there in Traderland, D7 here with Grok Trade. And this is Election Day Special Edition. I gotta show you this. Brian, thank you for the gift. Look at this. How cool is that? How cool is that? I mean, crazy. All right. This is Tuesday, middle of the day. On Tuesday, markets are going up. And because normally, statistically speaking, when the elections happen and there seems to be a winner or there is a winner, the unknown becomes more known. So because of that, the perception is risk decreases and there's more stability. For that reason, you usually get a rise in the markets. Statistically speaking, usually when the Republicans win, you'll get a rise in the markets because of less spending, more business-friendly policies. Not always the case, but I was looking back at data, a lot of data showing that. However, nonetheless, when Democrats win, you will also see after a while, you'll start to see the markets rise too. Usually markets rise from lower left, upper right. That is very traditional, going back for many centuries. So you'll get volatility leading up to the market, which we've seen a lot of volatility leading up to the election here. So elections bring uncertainty, uncertainty brings volatility. We have seen some of that. The question is now, will we see more stability and a rise in the markets? We could. So if we're looking here at the spiders, you're looking at technical analysis. Remember, this day right now is what's called a dynamic candle, meaning that it's still moving up and down. We don't know how this is going to close on Tuesday, but I just wanted to give you guys a quick peek to this, and I'm gonna share something with you. It's the last call, and why I didn't do a weekend video. And why it's going to be a last call for a special invite. All right, so here it is. We're starting to pop here. We're under moving averages, above the 50-day moving average, and we're just caught up between these moving averages. It looks like we're trying to rally higher on the spider. The diamonds, if you look at this, we had a big drop. It looks like it's trying to bounce right now. Will it bounce? The Qs, if you look at this, we down. The last few sessions, we've been higher. A lot of upside resistance. The Russell 2000. Last couple sessions, Friday we bounced, Monday we bounced. So far on Tuesday, we are bouncing. A lot of overhead resistance. The financials, very important. Down. It's kind of a bull flag looking thing. We have resistance right above us. Can we blast up through it? We're trying to go bullish right now is what the markets are trying to do. The US dollar is down. That is going to help gold, silver. It's going to hold precious metals, help commodities as a whole, and help equities as that. Gold, if you look at that, been under pressure. So the US dollar starting to drop. It should get this thing to get another rally to the upside. If you look here at silver, it's trying. We're at major support. Is this going to bounce? Let's see if it does. The VIX is at 20. That's the fear, okay? VIX is at 20. But, man, we're at 70, gang, on Bitcoin. Bitcoin is pulled back and now getting ready to rally. The question is, how high is Bitcoin getting ready to go? A lot of people starting to move into Bitcoin. Big, major players doing that. I want to take a quick look at the weekly chart. The weekly chart gives us even a better picture of what's happening. I have a line chart here. We're in spiders is up. But I do want to bring something in. If you look at here, we have bearish divergences taking place. So we got to be careful with these bearish divergences. This thing is ready to break down pretty soon, it looks like. But we could still keep chopping around in this upper trend for some time. Doesn't mean we're going to break down anytime soon. But just, you have to be really careful. When this thing drops, it could drop and mean business. This is the financials we're looking at. If you look at the spiders here, say we're going higher. If I bring in these, you'll see bearish divergences taking place. If I were to draw in another line here, going from here down, bearish divergence, it's there. we have to be really careful. These rising wedges can be lethal. Diamonds, if you look at here, we're at major support. We need to bounce off of that support because I have a red line up here. It tells me that chances are we got divergences, and sure enough, we do. And if you, Nasdaq, the technology stocks, it looks like a big M. You see this, big M, but we're at major resistance, but we're trying to hold strong up here at these highs. Can we break higher, making an ascending triangle? In the Russell 2000 weekly chart, if you look at this, a lot of upside resistance that is dealing with. Let's see what happens there. In the financials, which we already looked at, we're going up. We already looked at this one. US dollar peaked out and now is dropping, but failed to hit the upper trend line. So it's showing that US dollar could be dropping. That should help out gold, should help out silver, which that's gold now. This is silver, and the VIX is at 20. Let me explain to you why we did not have a weekend video. We had a very nice mentorship. It was great. One of the gentlemen that came in is a fund manager for $500 million. And it was our pleasure to have him come through our program. We get a lot of brokers and a lot of investment advisors come through because they want to learn the technical analysis part of trading. They're not taught that in their education and the tests that they need to take. It's very shallow compared to what we offer. So that was, we focused on that. And here's the last call. And what I'm looking for, if you are a trading geek, okay, and you're into data and you love data, and that's something that you're in, go to groktrade.com/algo class. So when you go to algo class, you're going to see a recording. This was last Saturday or 2 Saturdays ago, and watch this video. What's nice is you can fast forward. You don't have to watch all of it. You can fast forward and listen to whatever parts you want to. But I show you how to make a trading algorithm free. So it's very educational. I will show you how to do that, and I'll show you what we're looking for. Here's the long and short of it. If you want to lock arms with me and work together with me, I'm looking for a team of traders who value data, statistics, and more importantly, they love the idea of systematic trading. What is that? Trading algorithms, meaning that we can bring some level of autonomy to our trading, building trading algorithms to buy and sell, which will give us data. And we want to crunch that data and look at it. Do you have to be in data statistics to be part of this? No. Do you have to be a trader? Yes, or you won't understand any of this. And what's the small wording, the small text? Here it is. If you jump in with us, you're going to go down at the bottom, join algo. When you click that link, you're going to join. What that means, you're going to sign in a contract. Being part of this doesn't cost you anything, but you're not going to get paid anything. It's about jumping in and being a part of this. But you'll sign an agreement. It's an NDA, a non-disclosure. It's also a rights agreement saying this. When we come in and all work together, we think that this collective genius of ours we put together that will help us get down the path much faster, finding algorithms, especially with the help of AI. And what I'm doing is crowdsourcing. I'm flexing humanity. I'm flexing our ecosystem, people that want to join in, because 10 minds, 20 minds, 30 minds are better than one. That's what we're doing. So when we find a working algorithm, we will all start to hone in on trying to make it better and better and better. We will all benefit from that. You will benefit from that, and everybody else will. So that's what we're doing. So if and when you come in, what will be expected of you? That at least a couple times a week, you're going to be putting some time in helping us find algorithms and or developing algorithms not you developing them, but using my GPT that I developed, where you just give it a prompt, meaning, hey, I want to buy if the 20-day crosses over the 50-day SMA. And I want to sell if it drops below, if the 11 EMA drops below the 17 EMA. That's my sell trigger. And it will build out the code for you. You need to have a trading view account. Go to Grok Trade, and there's links everywhere for the trading view. It'll give you 30 days free. Jump in. You'll have to have that account. It's an affiliate link. They've teamed up with us. We teamed up with them. They interviewed me on a trendline course not too long ago. Fantastic. So there's the long and short of it. If you want to join, this is the last call. If you're in, great. Well, now you know what it means. You're signing in a contract. More importantly, you're going to be active at least a couple times a week in our Discord, giving information, sharing information, responding to stuff, and being part of little projects and geeking out along with us. So there it is. Take care, guys. Hope to see you guys at the next mentorship coming up. Look into that, gang. So take care. We'll see you later. Bye. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle and with being guided by a mentor, let finances be this. If you're a trader, you rate you from amateurs to professionals. Mentoring will do that for you. Anyway.